essence of good trading in one way or another is the ability to make money on market trends. Because regardless how do you want to turn it, but if you want to make money, you have to either buy for lower prices than you are selling, or you have to sell short for higher prices and bet that these higher prices will decrease in value. That's speculative trading 101. But of course, here is the issue. There are probably infinite varieties on how we could actually use this information and how we could trend it. Because we could actually make something like weekly charts and hold our positions for 10 years and follow largest index funds. That's the one way how we could actually capitalize on market trends. And at diametric opposite will stand idea that we could actually make on money on movements which could last for a couple of days. So that also will be money out of market trends. One will be long-term trends, other will be short-term trends. But idea always is the same. Question is how to actually do this better and how to understand this better. For once, well, answer is simple. Well, all of them relies on one idea that markets are having strong moves from time to time and these strong moves will continue. So difference is how we actually could see what's the best way how to do it. But for that we have to have charts to make more in-depth analysis. So let's go on. Now, let's take our good example of Bitcoin. And Bitcoin is good example because now we have really strong price action. So we have weekly chart now, and from weekly chart, let's see simplest approach to identifying trends. And this is breakout approach. The simplest way how to do the breakouts are for round prices. So we might have 60,000, 65,000, 70, 75, or 80,000. Once price breaks certain price levels, they usually have tendency to continue these moves. That's very old strategy and it works if price movements are strong. Other approach to price breakouts is if prices are hitting certain price ranges. It could be 30-day, it could be 60-day, it could be all-time highs. For instance, if prices are hitting 30-day heights high here, it continued with strong action. Then it hit previous all-time high, which was at May 2024, and it hit continued this price breakout and hit even higher prices when it hit 80,000, and now it's still hit higher. But it is Bitcoin, so we never know. It might go to $100,000. It might go and show some similar patterns as we see now with previous spikes which we had in like late 2021. With Bitcoin we never know. So yes, but nevertheless this is good indication how it works. But actually this approach is relatively difficult to employ and it requires a lot of work from your side unless you simply want to try it on intuition. So I would say it's far better to use trading indicators for this matter. And more or less all trend indicators are same, whether this is Ichimoku or Bollinger Bands or moving average convergence divergence. They all rely on one thing, and this is moving average. So here, do not overcomplicate things. Use one simple trend indicator which shows one of two things. Either there is upwards trend or downwards trend. Once trend is upwards, you either do nothing or go long. Once indicator shows trend is downwards, it means you do nothing or go short. That's it. Way how you use these indicators, here we have weekly charts and I would say 100-week moving average. It will show you very long term trends. And probably it wouldn't be the best way how you actually could trade Bitcoin out of this matter, but it will show you general idea. If you want to trade Bitcoin better with moving averages, something like daily charts would work way better. So here you could actually see how you could hold your positions for years and still make a good profit. But still, Bitcoin is too volatile for these long-term moving averages. So for Bitcoin, actually, excuse me, 50, sorry, 50-day moving average would work way better than longer moving averages. And you see, for long term, trading, it works wonderful. Actually, for short term as well, because if there are decent long and short term markets, you see since 2020, 2021, 2021, 2022, it actually captured most of the trends. So for volatile market, slightly lower time moving averages work best. So that's the best approach for highly volatile markets. For highly stable markets such as S&P 500, well, here that 100 week moving average on weekly charts works really well because markets are stable, and here you could actually hold your positions for decades. And if your risk management is correct, namely, if you know how to minimize losses in these choppy markets and maximize your gains by risk management rather than market forecasts, you will make far more money than by simply buying and holding S&P 500 index. Yes, and this is the most important thing here. We have different markets, different time frames, different moving averages, and they give you infinite possibilities to make money. But our trick is to use them wisely. So, for volatile markets, use slightly lower moving averages and understand that you will have a lot of whipsaws, but a lot of trading opportunities. For more stable markets such as S&P 500, you could use long-term moving averages with higher durations if you want to trade on long term, but they will work at shorter time frame and shorter moving averages as well. But since market movements wouldn't be that spiky, there will be slightly less money making opportunities. So watch each market carefully and know how to apply this correctly. But my trading strategies are already showing you that. So if you want to have best trading strategies, join my trading program or follow traders that I am providing with you now.